In today's video, we are going to look at three very good undervalued mid-cap companies. Now, why are we looking at this? Is basically because right now the market is not making very heavy moves. There is a lot of consolidation happening. Yes, it is going up, it is going down, but this is also giving a lot of opportunities because there are a lot of these undervalued, secret, beautiful picks that are getting very good growth triggers maybe the next year or maybe the year after that. So these are some really good opportunities right now. So let me just quickly show you what these opportunities are. But please understand, this is only for educational purposes, and we will be going very deep in today's video, like little deeper research compared to normal. So please stay tuned. Now, the mid cap companies that I'm going to show you can definitely reshape your entire portfolio if you catch them early, right? But let's take a step back, because just like how you catch things on early, it is very important to also catch things that are happening in other sectors as well. For example, if you look at what is happening with AI and automation today, the industry is evolving extremely fast. And in fact, a lot of people last year were laid off and a lot of people got unemployed, mainly from big companies like Google, Facebook, and Apple, because they were not in tune with the latest innovations in AI. But the truth is, AI is not taking your job. In fact, it is an opportunity for all you people who want to learn about AI, because this can definitely boost your career and give you another income path. Now, if you are interested in learning about AI and understanding more about this, then you should definitely attend this 3-hour hands on training that is going to happen with respect to AI. Now, usually it's a paid training, but this is going to be open for free for the first 1,500 users who watch this video and register from this link, right? It is going to be completely free for the first 1,500 people. After that, it will be paid. So the link is in the description and I am pinning it as well in the comments. You can go and register now. Now, in this training, you will learn how to use AI to streamline complex tasks, analyze complex data on Excel itself using AI, build your personal brand, and also building presentation in seconds. Basically, job hunting, salary hike strategies, and 20 more different AI tools is something that you can definitely use. Now, this training is not only for tech people, this is for non-tech backgrounds as well. Even if you're in marketing, finance, maybe a content creator, maybe a freelancer, this is all for you. Now, after completing this training, you will also receive a bonus of 5,000 rupees. Now, obviously, this is a very good training, and more than 1 million people have actually attended this training. And me, myself, and my team has also attended this training. And that's why you see that I use AI a lot in most of my content and videos. So don't wait for it. Register using the link now and also join their WhatsApp group to get timely updates. Now, let's get back to the video. Now, the first company we're going to look at is Novama Wealth. Now, please don't be like other people where you'll just look at Shashank said Novama Wealth, okay, 29p, undervalued company, let's buy. No, let's understand what is going on with Novama example and understand whether this is a good company in the long run. Where are the growth triggers playing out? Let's go a little deep into the details, right? Now, Novama is in the AMC business, okay? Not just in the AMC business, but let's put it as it is in the capital markets game. Now, India as a whole is growing drastically. People are becoming richer. People are taking more loans. HNIs are becoming richer and richer. And when you manage people's money, rich people's money, you intend to make more money off that. Now, if we quickly look at the trading view chart, you will see that the company has been doing really well since it's come out. And recently, we also saw that one of their parent companies, which was Edelweiss Financial Services, sold 7% stake in Novama Wealth for almost 1,759 crores. There was a massive block deal that happened, which is a very good news because these guys are out and these guys had actually created problem in the past. So now since Edelweiss is out, Novama is completely free to do what it wants. But let's understand a little bit more about Novama's business. And for that, I want you guys to definitely go read this beautiful PDF that has been given by Motilal Oswal in 2024 December. It is a 194 page PPT, which is a complete breakdown of the capital market space. And I'll show you why this is so important, because me and you both need to understand what is going on in the market and what is going on in the next 10 years. Now, if you look at this, this is the Indian capital market, a golden era that is being created today for the next 10 years or next 15 years. And why this is happening? Because so much tech innovation has happened, UPI has kicked in, eKYC has kicked in, so onboarding becomes faster, people are making more money, people will invest more money, the growth will happen. Lot of plays are happening in this space. Now, capital market is very big, right? It has HNIs, it has ultra HNIs, it has wealth management, it has AIF, it has mutual fund distribution, it has AMCs. A lot of things are there in this place, right? But let us understand where the opportunities are, what is happening in this space, and we will also look at Novama. Now, before we do that, let's quickly go down. As you can see, this is a very big report. It has almost all the companies in the capital market space. Wonderful companies here. I would suggest in your free time go and read about this company. But as I said, in today's video we're going to go a little deep, right? Little deeper research. So let's understand this, right? Now when you look at any Indian capital market company, you will also notice that these companies are cash rich companies. Why? Because they're mostly in the service game. Money makes money concept kicks in here. If you are dealing with HNIs and ultra HNIs, you will also see that the only people to get money from them, the actual cost of these companies are manpower, right? So when you have RMs, okay, relationship managers, or they also call them sales managers sometimes, or most of them use it as RMs, as relationship managers. They are the guys who maintain relationship with the rich people, get all the money into their fund. They keep churning different funds out of that, keep moving his money here, there, making the money grow. So the more the money grows, the more money they make. And it's a very fun fact, because if I have 100 crores that I'm managing, let's say I make 2-3% out of that. But that 100 crores will also grow over the next 5, 10, 20 years, right? That compounds. So as and when my client compounds his wealth, my revenue also starts compounding in wealth. So AMC is a beautiful, superior cash generation machine, as what they're calling it right now. And it has given very good growth in the last 5 years, right? But the penetration is so low because just now people have started opening mutual funds, people have started using demat accounts. A lot of scope is left. As I said, with account aggregation, digital India, the technology has also come up so strong that it's become much easier for people to now start investing. Now, the preferred picks they have, we will look at the preferred picks later, right? But if you see the buy and sell targets they've given here, you can see that our Nuama that we are looking at in today's video, according to Motilal Oswal, is a buy with a 25% upside potential. Now let's look at a little bit more. I want to take you to the valuation slide, which is a very beautiful slide. Let me go down. Look at this valuation slide. Okay, so this is very important. As you know, markets only work on future valuations, right? Forward looking PE multiples. Now if we look at only the wealth managers and distributors, let's not look at AMC exchange, we will not look at intermediaries, we will not look. In fact, intermediaries are so good, but as you see, everyone is overvalued as of today. Even the PE is 61, 51, 60, very overvalued, right? Exchange brokers also, most of them are overvalued except Angel One. But if you look at the wealth managers and distributors, which is what we're looking today, we have 361, Noama, Anand Rathi, and Prudent. Now, out of this, we will look at Noama today, mainly because out of all the four, if you look at FY25 PE of these four companies, Noama is sitting at 25.8 PE. And if you look at the forward multiple of next 2 years, it's coming to 19.3. Now, is that good? Is that bad? Let's understand a little bit more, right? Now, if we go here, we see the revenue CAGR expectation. Revenue CAGR expectation from FY24 to FY27 estimate. Let's see what is the growth rate. CAGR is nothing but compounded annual growth rate. What is the growth rate that the EBITDA will grow? What is the growth rate that the profit after tax will grow? Now, according to estimates of Motilal, Noma is set to grow at 24% revenue, right? CAGR, that means 24% year on year growth. The PAT is expected to grow at 30% CAGR, and it is still sitting at a very low PE of 25.8. Right, so this gives me a huge opportunity boost right now to look at it, because if I look at Anand Rathi, it is giving the best growth rate, 28% and 31%. But even if you look at that, the PE has already been factored in, right? I would not say that it will not go up. Definitely, it will go up, right? But if Noma has to catch up with its peers just on PE re-rating, if this goes from 25 to 50 itself, the stock will double. Now imagine 25 to 50 it will go, and earnings go up. Again, PE gets adjusted. Again, it goes up. Will create massive wealth going forward, right? So that is why I feel that Novama is a very good thing. But what are the growth triggers of Novama? So I think on page 130 we have the detail of Novama Wealth. I would strongly suggest go through this report. It is a wonderful report. You can just Google this, called Motilal Oswal Thematic Indian Capital Market, a Golden Era. You will get the PDF from Google, right? Now, if you look at this, as I said, the current market price they have shown was 7028, but if you look at the market price today, it is at 6913. So it has actually gone down further from the current market price of what they had when they were doing their research. And if you look at it, the target price is 8,800. Very good. Now, if you go here, you will understand that Noma is a play on multiple themes. As I said, they do ultra HNI management, they do normal HNI management, they do wealth management, and they do AMC as well. Whereas if you look at 361, which is IFL Wealth, they focus on only ultra HNIs. They have a lot of ultra HNIs under their belt, and that is what they focus on right now. Now let's go a little further and deeper into this, right? Let's look at the growth triggers here. Mainly what they're doing is they're adding a huge relationship manager force, right? The RM force, as you call it. The more number of RMs you have, the more business they will get. And usually I tell you how it works deep inside this industry. There's a very cutthroat industry. So if I am an RM and I'm working with, let's say I'm working with Anand Rathi, right? And if I have very good customers, usually Novama will pay me a huge amount of money as a signing bonus, high salary, and say, get your entire customer base and come here. It's called the book. So get your entire book and join me. So it's usually a cutthroat competition where I'll pay you more, you pay me more kind of a scenario. But as and when India is growing, this is also going to start growing quite drastically, right? And Novama is also coming up with their new product launches, a real estate product with Cushman, and ties up with many distributors as well. The AMC business is doing well. So a lot of things are planning to play out in this entire market. And this is why I feel that Novama has a very good opportunity to start doing really, really well in the future, right? Now, there are growths, there are problems to this. As I said, always it's good to look at good and bad features. If you ask me what are the negatives of this entire industry, if there is a slowdown in the market, if there is a recession that comes up in the market, people are not able to spend a lot, right? If the liquidity of the market has been taken out, or if tomorrow the tax rate go up a lot, then this entire thesis will not play out. But think about it. Today, if you see, I don't see recession coming anytime soon, hopefully not. Second thing, I feel the taxes today are already at the highest state right now. I mean, or kitna choose loge, right? There is too much taxes right now. So I feel that will go down eventually in the future. And if that goes down, this will start doing even better. So that is why I feel that Novama would be my first undervalued pick. And a lot of triggers are there to play good, very few triggers to play bad. So I feel if there's a long-term 2-3 year pick, this should start giving you beautiful result, right? So that is my pick number one. Now, pick number two, we will look at a company called Natco Pharma. Now, why Natco Pharma, right? Natco Pharma is sitting at 13.3 PE. Now you'll be like, Shashank, 13.3 PE, that is madness. It is such a beautiful company. Let's buy it. Please understand, low PE does not mean it is a good company. Please understand this. It might be a low PE because people know that there is something wrong with this, which you might not know. So don't blindly buy. But obviously, my job is to do research, analysis, and understand what is going on with Natco Pharma. So pharmaceutical companies usually have drugs that they sell. Okay, sometimes they have official tie-ups where they can sell exclusive drugs. But after some point, that drug, the patent goes away from that drug, or the exclusive license also goes away from a drug. After that, the sales of that drug will go down, right? But when you have the patent for that drug, you make a lot of money and you cover a lot of cost. So the job of a pharmaceutical company is to constantly get new drugs, get it out in the market, be a unique player, make a lot of money. Now, Natco Pharma, something similar is happening. And if we look at Natco Pharma from just the Nifty Pharma index, you will see Natco Pharma in the last 1 year has given 45% return, whereas the Nifty Pharma index has only given 14.95% return. So over and out, I think Natco Pharma has beat the index. But there is a problem with Natco Pharma. Now, if you look at Natco Pharma, one of the key revenues that they were getting was from a drug called Revlimid, right? Now, Revlimid, which the patent expires in Jan 2026, after that, the growth of the story, the entire growth story of this company will have a problem. Now, if Jan 2026 Revlimid goes off patent, obviously the sales will drop because a lot of competition will come, price wars will happen, all of that will start, right? So, how does Natco Pharma become better? Usually, what they do is they go find another drug, they apply for other licenses. Once the patent is off of those drugs, they start doing a new patent in India and they start selling it in India. So, the problem now, what is happening is it is going off, a strongest drug is going off, and now people are waiting for that new drug to kick in, but nobody knows which is this new drug that will give a lot of revenue. And that is why Natco Pharma is sitting at a very low P. But knowing Natco Pharma and their entire management, they are very strong and they will figure out a new drug to make a lot of revenue. In fact, if you go to their conference call highlights over here, you will see that the somebody also mentioned, so Somel Shah said, last month we had given a notification that Mylan and Novo have reached on a settlement for the Ozempic drug. So throw some light. So they said the launch date is confidential. We can't answer that. But the review is ongoing with US FDA. So at this time they can't share timelines. But in they feel that the in India launch that will mostly happen only post 2026. So what is going to happen is in 2026 Jan, the limit is going to fall down, right? And if they can get all the approvals of Ozempic, this will start flying up. So it is a risky play that you are playing on something that is not going to play very well in 2026. But because of that, people are giving 13.3 PE right now, which I feel is not great. I think that is more scope to that. And if you look at the recent data that we recently see, so all companies come out with data, right? All companies come out with data about what is the export that has happened with all the pharmaceutical companies. And we can recently see a report here where Natco and Newland gave the top performance with respect to year on year growth in exports. So the top performers for pharma sales performance 2024 year on year growth, Natco Pharma gave a 90% YOY increase and the API segment grew by 84, and Divis Labs and Dr. Reddy's also gave a strong performance. Whereas the decliners were Laurus Lab, Aurobindo Pharma and others. But Laurus is doing a different play that should play out around March. So a lot of people are waiting for that to kick in, and that is why you see the stock price is also going up. So all in all, it looks like Natco Pharma is doing well, but people are not ready to give that extra premium in the market for this company, and that is why the P is sitting at very low amounts. Now, coming to stock number 3, it is in the chemical space, also called Deepak Fertilizers, and it is sitting at 24.8 PE. And if you look at the stock price, it has already started its movement, it has started its rally. And why is this sitting at such a low PE, right? For that, we need to understand a little bit more. Now, there are some growth triggers coming in this company. What are the growth triggers? One, they have two major capacity expansions that are happening, but this is usually coming up in FY26 is what they are expecting, right? So as you can see here, in the next 1.5 to 2 years, both these plants will get commissioned, and we will see both our top line and bottom line going up a lot. So if you know that in the next 2 years this will pick up and they will have a huge increase in top line and bottom line, then it seems like a very good opportunity here. But only thing is, will it play out by then? That is the first question. Now, the second key growth trigger here, if you look at this report from Keynote, you will see that again, growth with mega expansion underway. So everyone is waiting for this mega expansion. But apart from that, something else also has played out. Now, Deepak Fertilizers has three main businesses. One is mining chemicals, one is industrial chemicals, and the final one is crop nutrition business. Now, what we are seeing is there is a huge growth happening in both mining chemicals and industrial chemicals, and some amount of growth is also happening from crop revenue as well. And if you look at the industrial chemicals, which is only 21% of the revenue, if you see, there is a very key thing happening in this, which is called isopropyl alcohol, which is IPA as they call it. There is something that has happened with IPA, and let me show you what that is. Recently, the government imposed anti-dumping duty on 5 Chinese products for 5 years, and out of that, the first one was IPA, which was isopropyl alcohol. And the key maker of this isopropyl alcohol is actually Deepak Fertilizers. Now, going through more about this report, we will want to understand what else is happening. Yes, we know that anti-dumping duty has been imposed, so that is good, but that is only a small portion of the revenue, which is 21%. But what is happening with the crop business? What is happening with the TAN business? That is what we are looking at, right? So the crop business also is doing well. There is favorable monsoon that happened this year, so there is going to be very good growth coming in. And if you go down through this report, let's not look at the financials right now. If you go down and just look at the positive key growth triggers that are there, even from the con call highlights, you will see that whenever ammonia prices are low, the downstream business benefit will reduce from input cost and improves their profitability. So the lower the ammonia prices, the better it is for this company, right? And the higher profitability from selling ammonia at elevated prices. So for them, raw material goes down, they mix it up, they do it really well, and they sell it for a very high cost. Now, how do I find out what is the price of ammonia? So what I did was go deeper into it. We can understand when we go use a platform like Tijori, which has raw material data. You can click on the international price of ammonia and see how the price has actually fallen down quite drastically, which helps them in their margins, right? And in 2022, the price of ammonia was huge, right? When that becomes very big, usually what happens, the margin gets significantly affected, and if this starts falling down, it becomes much better, right? In fact, this can also give you a lot more data. For example, let me do Deepak Fertilizers, and you will see this, right? The stock obviously has been doing well. If you look at the revenue breakup, this is how it looks like. And IPA is almost 45% of the product breakup is IPA, right? And if you look at product wise breakup is here, you can check more information over here. Let me go down. Operational profit, asset breakup, capex, huge amount of capex is coming in. And if you look at all the capacity utilization that they have, they're almost at max capacity utilization. So this is going to be a very big opportunity for this company right now. And I feel in the next few years, this is going to start adding huge amount of value. And mainly, if you look at what is going to happen in the next 2 years, which is FY26, both with this company, with Natco, these two companies have key growth triggers in 2026, but Novama has a wider trend that is playing out right now, which should play out very, very, very well. So this is what we are assuming with the top three companies. Now, guys, I know this was a slightly longer video and we did little more research into it. So let me know in the comment section below, do you prefer slightly deeper research like this, where we look at multiple different growth triggers and trackers, or do we just do simple fundamental analysis? So please let me know in the comment section below. And also, I want to give a message out to a lot of people who come on this video and they will write the names of these three stocks. Now please understand, all those people who write it, you're doing a huge disservice to people, because a lot of people will just come, see those three names, buy it, and they have no idea what they're buying into. Because we now, me and you know that both Natco Pharma, Deepak Fertilizers are going to play out in 2026, but that is why they're sitting at such a huge opportunity today, right? So if you don't know, and they will look at your comment and buy, and you will do it only for like 2 3 likes, but you will literally destroy their entire ability to start learning. So I suggest, don't do it. And if you do it, no problem, I usually just delete the comment, and that is why you don't see it in any of my videos. Okay, so please let me know if you like this video, and if you did, comment below on what you liked, and let me know if you have any more growth triggers. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.